Hi there, it's November the 4th, and you are watching Into Vietnam, the daily and exclusive English bulletin on VITV. In today's headlines, Fitch Rating joins Moody's to raise Vietnam debt rating this year. Vietnam Prosperity Bank Securities believes the gross domestic product growth of Vietnam will surpass 5.8% in 2014. And the Ministry of Industry and Trade sees trade deficit of $5 to $10 billion in 2015. Now, Vietnam credit rating was raised to 3 levels below investment grade by Fitch Ratings, which said the country's macroeconomic stability has improved. The companies raised rating on Vietnam's long-term foreign and local currency debt to BB- from B+, and revised the outlook to stable from positive. Standard & Poor's already raised Vietnam at BB-, while Moody's Investor Service raised its assessment in July to B1, 4 steps below investment grade.
Fitch, just like the other rating agencies, has upgraded Vietnam based on the record of macroeconomic stability. As you know, in 2014, inflation has been low, the exchange rate has been very stable, and the level of international reserves also has gone up. Growth is also picking up a little bit.
Fitch Ratings said macroeconomic stabilization has contributed to a sharp turnaround in the current account, from a deficit of 3.7% in 2010 to a projected surplus of 4.1% in 2014. Ms. Đỗ Ngọc Quỳnh, the head of Treasury at Hanoi-based Bank for Investment and Development of Vietnam, said the rating upgrade will boost investors' confidence, especially foreign ones, and spur them to increase holdings of Vietnamese bonds. Fitch upgrade have strengthened the recent uptrend of the notes in the local market. Now, the Conference Economic 2014 Review and 2015 Prospects held in Hanoi on November the 4th, the VP Bank Securities show its optimism that 2014 GDP growth of Vietnam will surpass this year's target of 5.8%, mainly driven by public investment and export of foreign business sector. Regarding the balance of trade, export growth still depends on the FDI enterprises, which is believed to be sustainable. However, rising local consumption may create a trade deficit in the next 3 months, which will lower the trade surplus to $1.3 to $1.5 billion for the year. Regarding the government deficit, the bank forecasts that by the end of 2014, the deficit will reach around 5.2% of the GDP, thanks to the better-than-expected GDP growth. Deficit over budget revenue will rise to around 21%. The exchange rate has been rising but is still well below the ceiling price. Given current low levels of inflation and strong foreign reserves, the SBV is capable of cooling down the market. However, given the prospect of the appreciation of US dollar worldwide, the bank expects the interbank exchange rate to close the year at 21,456 Vietnam dong per US dollar. The further reductions in domestic gasoline prices in the fourth quarter will help to restrain other resources of inflation. The bank revised their forecast for 2014 inflation downward to 4.2% year-on-year. The government bond yields are likely to inch up slightly to the end of the year, driven by stronger credit growth, appreciation of US dollar, and higher budget deficit data. The bank forecasts the 5-year bond yield in the secondary market will end the year at around 5.6% per annum. Regarding the stock market, due to lower than expected inflation and continually falling bond yields, the bank expects the medium-term forecast for VN Index to 600 and 620 over the next 3 to 6 months. At its regular press conference on November the 3rd, the Ministry of Industry and Trade said Vietnam will enjoy $1.5 billion of trade surplus this year, but then turned back to trade deficit in 2015 after 3 consecutive years of surplus.
As presented to the National Assembly, MOIT is planning to trade deficit 5 to 10 billion US dollar, equivalent to 5% of total exports turnover in 2015. Exports in 2015 is estimated to raise 10% compared to 2014, but imports will increase even more. Explaining the forecast, the representation of MOIT said that exports from the FDI area was the main reason for Vietnam's trade surplus in the recent years. Meanwhile, the local businesses remain trade deficit. At the same time, FDI businesses have also gradually reduced their exports. It is estimated that in 2015, the potential export growth of this area wouldn't be as much as before. Secondly, as the Deputy Minister said, the export growth has decreased from 2011. 2015 will open up many opportunities for imports and exports. However, Vietnamese export volume won't improve because it hasn't met the rigorous standards of the market. Thirdly, the world economy is expected to grow faster thanks to many signed free trade agreements. Foreign investment into Vietnam will spur the import of raw materials, machinery and manufacturing equipment, and reducing the trade surplus. The unstable politics with China is the fourth reason. Vietnam has to diversify and expand import markets to avoid depending on any specific one. Other markets higher qualities demand higher prices. Furthermore, thermal power stations are going into operation next year, so coal imports are required. Vietnam will also import crude oil for domestically oil refinery instead of importing petroleum.
And now we move on with some other notable news.
Vietnam's Asia Commercial Joint Stock Bank recorded net profit during July-September, falling 34% from a year earlier to 264 billion Vietnam dong, equivalent to 12.4 million US dollar, while the 9-month revenue fell 12.5% to 10.58 trillion Vietnam dong. Total assets at the end of September rose 7.7% to 179.38 trillion dong from December the 31st, 2013. Bad debt at September the 14th was at 3.07% of loans, up slightly from 3.025% at the end of last year. According to Thomson Reuters data, ACB is 15.42% owned by London-based Standard Chartered plc and 7.47% owned by British Connaught Investor Limited.
According to the Ministry of Investment and Planning, Vietnam has so far invested $19.1 billion in 904 projects in 63 countries and territories worldwide. The projects mainly operate in the fields of mining, agriculture, forestry and seafood, electricity and gas. In the first 9 months of this year, Vietnamese firms invested 83 projects worth over $1 million in 23 countries and territories. The investment were mainly poured in information and communications with $527.1 million and agroforestry and seafood with $348.9 million. As usual, the final part is summary of local gold prices, forex, and stock market. Now, our program has come to an end. Thank you so much for watching. We'll see you soon and goodbye for now.